Every country is in debt. The United States has long passed $38 trillion. As of 2025, it's approaching $39 trillion. The European Union's total public debt has exceeded 17 trillion euros. Japan has left $10 trillion behind. It equals 263% of its GDP. When China's local government debts are included, it's in the $13 to $15 trillion range. Even Germany, despite the disciplined image it boasts with its debt brake, is above 2.5 trillion euros. The oil kingdom Saudi Arabia's debt-to-GDP ratio, which was 2% in 2014, has now soared to around 30%. Even Norway, with its $1.5 trillion sovereign wealth fund, started borrowing when oil prices fell. Rich countries like Singapore, Switzerland, and the Netherlands are also borrowing. Global total debt has already surpassed $330 trillion in 2025. While the world economy is around $110 trillion, debt is 3 times that. So, if everyone is in debt, who exactly is the money going to? This question seems simple on the surface, but the moment you answer it, you fall into one of the deepest cracks of the modern world. Because the answer is this: the world isn't in debt to anyone. The world is in debt to itself. And that sentence is, at the same time, the most comforting and the most terrifying sentence there is. Because being in debt to ourselves does not mean equality. Interest payments flow from the bottom up, from the tax-paying, working, rent-paying, credit card-indebted billions of people. Every penny that leaves their pockets flows as interest into someone else's portfolio. Debt is the 21st century's quietest wealth transfer machine. How is this machine built? The story begins long before credit cards, blockchain, or even petrodollars. In the summer of 1694 in London, a group of merchants and bankers made a deal with King William III to cover his war expenses. In return, they would receive perpetual interest. That interest would be deducted from future taxes. The deal was very simple. Give us gold now, and we will pay you interest forever. To manage this agreement, the world's first modern central bank was established, the Bank of England. History books call this the financial revolution. In reality, the foundation was laid for history's largest Ponzi-like structure because the principal would never be repaid. Only interest would be paid, and that interest would be financed with new debt. A bond was born, a tradable piece of paper. For the first time, a state could spend money it had not yet earned. The idea was so powerful that throughout the entire 18th century, every major European state in Europe copied the model. France, the Netherlands, Sweden, Denmark all established their own central banks, issued bonds, and financed wars. The Napoleonic Wars were the first major stress test of this system. Britain won the continent by indebting it. It is said that the true victor, Waterloo, was not Wellington, but the Rothschilds' carrier pigeons, because they learned the outcome first and made fortunes by manipulating bond prices on the London Exchange. America entered this game late, but played it on a much bigger scale. It financed the War of Independence with French bonds, the Civil War with Lincoln's greenbacks and bonds, westward expansion, railroads, the Panama Canal, World War I, World War II, all with debt. In 1944 Bretton Woods, when it pegged the dollar to gold, it was essentially saying, all the countries of the world will now trust the dollar, and we will print dollars and sell bonds. When Nixon ended the gold standard in 1971, the system's final safety lock was broken. From then on, there was only one guarantee left: trust in America's promise to pay. Since that trust, the world has been playing a pure game of trust. Today, every bond issued by the U.S. Treasury is a promise. We will pay this money back, or at least we will pay the interest forever. And the world believes this promise so much that the yield on 10-year U.S. Treasuries still hovers around 4 to 4.5%. Japan is below 1%. Germany was able to borrow at negative interest rates for a while. In other words, people are giving money to the government and saying, please keep this safe. I'll give you even more if needed. This is a situation without precedent in history. So how is the $38 trillion U.S. debt distributed? About $7 to $8 trillion is intergovernmental. That is, debts that government agencies owe to each other, like Social Security. It's like the right pocket owing money to the left pocket. The remaining $31 trillion is debt held by the public. 21 trillion of that is in the hands of American citizens and institutions. Pension funds, CalPERS, TIAA, insurance companies, MetLife, Prudential, mutual funds, Vanguard, BlackRock, banks, and most importantly, the Federal Reserve itself. The Fed's balance sheet in 2025 is still around $7 to $8 trillion. That means roughly 20% of the debt is held by the Fed itself. Foreign investors, only 25 to 30% of the total. Largest foreign holders, Japan 1.1 trillion, China 750 billion and decreasing, UK, Belgium, Luxembourg, Ireland, Cayman Islands. The last four are tax havens, so the real owners of trillions are hidden. So the claim America has become a slave to China is technically correct but exaggerated. China's share isn't even 2% of the total anymore. The bigger creditor is the American retiree, the American bank, the American billionaire. In Japan, the debt-to-GDP ratio is 263%, but 90% of Japanese government bonds are held by Japanese citizens and institutions. So Japan, too, is in debt to itself. Interest rates near zero. The system keeps spinning. Germany has lower debt, but the same logic. German bonds are held by German banks and insurance companies. The same in the UK. The global version of the circularity is breathtaking. Japan buys U.S. treasuries. The U.S. lends to developing countries via the IMF and World Bank. Developing countries, Turkey, Brazil, Indonesia, South Africa, accumulate dollars and invest them back into U.S. treasuries. China accumulated U.S. treasuries for years, now slowly reducing, but still holds $750 billion. Oil exporting countries, Saudi Arabia, Norway, UAE, sell oil in dollars and park those dollars in U.S. treasuries. European banks hold U.S. treasuries as safe assets. Everyone is financing everyone else's debt. The hot potato is passed around on a planetary scale. There's only one rule. No one says repay. Everyone says refinance. And the referee of this game is the central banks. Fed, ECB, BOJ, PBOC. They no longer just set interest rates. They create money. Since 2008, through something called quantitative easing, they have bought trillions of dollars worth of bonds. Each purchase created new money. Central bank balance sheets, which were 1 to 2 trillion in 2007, exploded to 25 trillion globally in 2022. In 2025, even though slightly reduced, they are still above 20 trillion. Does this system never break? It does. And when it breaks hard. Greece 2010. Debt to GDP shot to 180%. Bond yields hit 35%. The state couldn't pay salaries. ECB and IMF stepped in. A 300 billion euro rescue package was given, but that money didn't go to the Greek people. 80% went to French and German banks. Greece was forced into austerity. Pensions cut, taxes raised, hospitals closed, suicide rates exploded. A whole generation became poorer. Even today, Greece's debt is 160% of GDP. Argentina, 2001, $100 billion default. 2020, its ninth default. Same story every time. IMF arrives, demand structural reform. Peso collapses. People take to the streets. Lebanon 2020. Banks collapsed. Currency lost 95% of its value. People attacked banks. Sri Lanka 2022. Foreign currency ran out. Fuel ran out. Government fell. Ukraine 2022 to 2025. War debt exceeded $150 billion. Who will pay? In every collapse, the same scene. The creditors suddenly become visible. IMF, ECB, BlackRock, PIMCO, Fidelity. Anonymous bondholders can choke an entire country. But what happens after collapse? The same system restarts. New debts replace the old ones. They call it debt restructuring. The machine is reset. Because debt is not designed to be repaid. It is designed to be rolled over. An individual takes a 100,000 lira loan and pays it off in 10 years. A state borrows $100 billion and doesn't pay it back even after 100 years. It only pays interest. And that interest is financed with new debt. This is called rollover, eternal rollover. Japan has been doing this for 30 years. Debt to GP 263%, yet bond yields 0.8%. Why? Because the Japanese buy their own bonds. And the Japanese see no alternative. America will do the same. 38 trillion, 50 trillion, 100 trillion. The number doesn't matter. What matters is trust. As long as trust continues, debt can grow forever. Just imagine if one day the U.S. said, we're going to pay off our debt, and actually started doing it, what would happen? Treasury bond issuance would stop. Banks and pension funds would lose their safest asset. The collateral chain would collapse. Dollar supply would shrink. Deflation would begin. The global financial system would collapse. In other words, paying off the debt would mean destroying the system. That's why no one pays it off. Everyone refinances. This explains why politicians saying, we will reduce the debt, are selling an illusion. The goal is not to zero out the debt. It is to keep it sustainable. As long as the interest to GDP ratio stays low, the system breathes. But whose favor does the system work in? Here's the most painful part. Interest payments flow from the bottom up. In America, nearly $1 trillion in interest is paid every year, projected $1.2 trillion in 2025. Who does that money go to? BlackRock, Vanguard, pension funds, billionaires, foreign central banks. In short, the richest 10%. On a global scale, the world pays $10 to $12 trillion in interest every year. That money is taken from workers, the middle class, retirees, and transferred to the richest 1%. Debt is history's greatest wealth transfer machine. And this machine never stops. Because if it stops, everyone loses. Even the creditor loses, because their bond suddenly becomes worthless paper. That's why everyone is forced to keep playing. They have to keep swimming like a shark. Does this story have an ending? It does. But no one wants to see that ending. If trust ever ends one day, interest rates skyrocket, currencies collapse, hyperinflation or deflation begins, the social contract is torn apart. But until that day comes, the system will continue. Because it looks like there is no alternative. Or is there? Some say modern monetary theory. If the state can print its own money, why borrow? But that's another illusion too. Because debt is not just a money creation tool. It is also a tool of power and control. Debt is the religion of the modern world. The bond is its holy scripture. The central bank is its church. Interest is its tithe. And trust is its God. As long as you believe in this religion, everything is fine. If your faith ever wavers, then we will all remember. Debt is actually a promise that cannot be kept forever. And one day, someone will ask for that promise back. That day, history will be rewritten. But for now, the wheel keeps turning. And we, both debtor and creditor at the same time, keep spinning inside the same machine. Forever. Or until that day comes. Endless thanks to everyone who watched until the very end. Don't forget to subscribe and turn on notifications. See you in the next video. Goodbye.